Hello, this is Todd Hubbs at the University of Illinois. Today I'm talking about my weekly outlook regarding trade negotiations and soybean prices. Since the onset of the 25% tariff on soybeans in June implemented by China, we've seen a couple of instances of the prospects of trade negotiations switching, and we've seen some rallies in soybean prices. I know with a lot of producers storing soybeans this year, on the hope that there will be some resolution to this trade dispute, we might bypass some of these opportunities to price soybeans on rallies associated with the prospect of trade negotiations. When we look at, just in general, at the fundamentals of supply and demand for soybeans, sort of independent of trade negotiations with China, we see a large soybean crop this year throughout the world. We're going to look at stocks to use in the world well above 31% on huge crops in Brazil, large crop in the United States, and a drought-induced crop in Argentina. But nonetheless, a lot of soybeans out there, with ending stocks growing in the world despite what we're seeing in the trade front. And in combination with that, we've seen this large wedge form between Brazilian and U.S. export prices. And Brazil's taken advantage of that. And under those favorable price conditions for Brazil, we've seen acreage climb 6.8%, or at least the predicted harvested acreage. And right now they're sort of setting Brazilian production up quite a bit at 47.7 bushels per acre. It's important to keep in mind the last 2 years Brazil's yield's been above 50 bushels per acre. And the excellent start to the growing season sort of points toward a larger crop than the USDA is currently projecting, so we could see those world ending stocks grow even more. So under these kind of growing world stock scenarios and good production in soybean, when you think about pricing soybeans in general, these trade negotiations might be a good opportunity or a decent window to price soybeans. Now, this comes down to, do you believe there will be a resolution? It looks somewhat unlikely at this point, so keep that in mind as we move forward. To give an idea of what the tariff from China's look like, I'm providing soybean export prices in 2018 from a major Brazilian port and from the New Orleans export elevator price. These prices maybe aren't perfect, but they're freely available to everyone, so I like to use them. And what you're seeing here is 2018, as we move through it, we saw the steel and aluminum tariffs go on March 23rd. Not a lot of divergence between Brazilian and U.S. prices. We saw the fight sort of pick up and the threats pick up. We saw the Brazilian trucker strike in end of May, and you saw U.S. prices go above Brazilian prices. And then on June 15th, we saw the tariff issue come to the fore and the wedge opened up. Since then, we've seen the tariffs implemented in July, another round of threats in early August, and then in September 24th, we saw the second round go into effect. And you can see the prices move back and forth. There's been a couple of rallies and narrowings related to possible resolution to trade with China. And in the recent couple of weeks, we've seen it narrow significantly as Brazilian sellers have started to think there might be a resolution. And we saw prices increase in the United States. I think you're going to see this widen back out a little bit, as we've seen in recent news that maybe there's no trade negotiation in the offing. Some critical points to take into account is the meeting between the president and Chinese officials at the G20 summit at the end of November, and the 1st of January, when another round of tariffs are supposed to go into place. If we can't come to some kind of agreement with China and those tariffs go into place, we might be in for a long haul in this marketing year on soybean prices. So any kind of rally around trade negotiations might be a good point for pricing. To give an idea of what the first month of this marketing year looks like a trade, and when you look at trade sales data, it's very similar. We've seen a shift out of China, a drastic shift out of China, as Brazil's picked up that trade. If you look from June through October in Brazil, their soybean exports are up 34.1% over last year, almost all of it going to China at our expense. Now, we have seen places like the EU, Egypt, Argentina, Iran, Mexico pick up the pace. Some of those are traditional places we send soybeans. Places like Egypt, Argentina, Iran, we don't normally export very much to. Argentina in particular is interesting. They seem to be importing our beans for crush and exporting theirs to China at a higher price. But you can see that drastic drop-off in China. Currently, the USDA predicts Chinese soybean imports at 3.37 billion bushels. China says their number will be about 180 million bushels below that. With all the issues with swine fever, their idea of changing their hog rations, the final number may be closer to what China is predicting, and most of those coming from Brazil. If they can last into early February, the excellent start to the Brazilian crop, looks like they may be able to get out beans early and not have to resort to importing very much from the United States. So when we're thinking about this market year and prices moving forward, while there is the promise of really strong crush, we're looking at 950 plus million bushels of carryout in 1819 on very reduced trade, and a lot of it has to do with China. While the Chinese and U.S. negotiators resuming talks is a positive development, the probability of a trade deal looks somewhat remote right now between the two nations. The forthcoming G20 summit is going to be an important point. The 1st of January is going to be an important point. And if we see trade negotiations sputter and the tariff increases enacted in early January, we can be in for the long haul. Anytime you see some kind of rally in soybean prices associated with the trade negotiations, I know it's difficult to take that opportunity because any kind of resolution to the trade deal will probably see high support for soybean prices. But right now it doesn't look very probable, and I'd like you to take that into effect when you're thinking about marketing this year. Well, I'd like to thank you for your time. As always, you can find my weekly outlook and daily analysis of issues related to Corn Belt farm economics at farm.daily.illinois.edu. Have a happy Thanksgiving.